Good morning, friends. Today we are starting with one of the most important chapters in the company law, that is directors. So today will be the first class of the chapter directors. Now the directors chapter is covered under section 149 to 172 of the Companies Act 2013. First of all, starting with section 149 subsection 1, it talks about minimum and maximum number of directors in case of OPC, public company and private company. Now let's have a look at the type of company, the minimum number of directors in case of each class of companies, as well as the maximum number of directors. So in case of OPC, the one person company, we have the requirement is to have one director as the minimum number of director, and maximum number of directors is 15. In case of public company, the company which can issue its shares to the public in terms of IPO and FPO and can raise the money. So in that company, the minimum number of directors is 3 and maximum number of directors is 15. In case of private company, minimum number of directors is 2 and maximum number of directors is 15. So from the table given over here, we can see that the maximum number of directors in all the three class of companies is 15. However, by special resolution, the limit of maximum number of directors can be increased. So in all the three class of companies we have seen in section 149 subsection 1, that is the OPC, the public company and private company, the maximum number of directors is 15, but by passing the special resolution, that is the votes cast in favor should be 3 times of the votes cast against the resolution. Means the majority should be at least 75% or more. So by passing special resolution, the resolution to be passed in the general meeting. And what is general meeting? It is a meeting of shareholders. So by passing special resolution in case of general meeting, the limit of directors can be increased. Now there are certain exemptions given. The exemption is given to NPO, that is the Section 8 company, as well as the government company. Now NPO and Section 8 company, that is the charitable companies, are not required to pass the special resolution to increase the number of directors and can have more than 15 directors. So we can say that there is no need, because government company is controlled by the central government or state government, or partly by the central government or state government, and where 51% of the paid up share capital, which is to be read as the total voting power, is held by the central government. So in that class of companies, it can have more than 15 directors, and there is no need to pass a special resolution to increase the number of directors. Exemption to NPO will be given only when it submits the financial statements under section 137 and annual return under section 92. It is to be noted that if the NPO is there and if it falls under section 149 subsection 1, means it wants to increase the number of directors to more than 15, because the limit of 15 directors is not in case of NPO, and SR is also not required. So everything can be done in case of NPO provided it submits the financial statements under section 137 as well as the annual return under section 92. Means the profit and loss statements, the balance sheet are submitted in due time, then only the NPO can enjoy these privileges. Now, a brief introduction regarding the type of resolutions in general meeting. These are not covered under section 149 subsection 1. It's only a basic understanding we should have that what sort of resolutions are to be followed in case of general meeting. So there are two types of resolutions. One is the ordinary resolution, another is the special resolution. Now what is ordinary resolution? Ordinary resolution means a resolution where there is more than 50% consent. Means the votes cast in favor are more than the votes cast against the resolution. A simple majority. In case of special resolution, it is said that when votes cast in favor are equal to or more than the votes cast against it, and it should be the votes cast in favor should be 3 times of the votes cast against. Okay, so there should be at least 75% or more consent is required in order to pass a special resolution. Now let's talk about the concept of women director. Now what is women director? Okay, women director is a woman who is appointed as a director in the company as per Companies Act 2013, and it states that there should be at least one woman director. Now, as per SEBI LODR regulations 2015, means listed obligations and disclosure requirements 2015, there should be at least one woman independent director in top 1000 listed companies. Also, as per SEBI LODR regulations 2015, in case of top 2000 listed companies, the minimum directors should be 6 directors. Okay, comprising of both men and women. Now, what the Companies Act 2013 states about the concept of women director. It applies to listed companies, it applies to unlisted public companies where the PUSC is 100 crore or more or turnover is 300 crore rupees or more. PUSC stands for the paid up share capital. So all those companies, the listed companies, the unlisted public companies that have the turnover requirement of 300 crore rupees or more and paid up share capital requirement of 100 crore rupees or more, then in such class of companies the women director is required. And if case there is listed company and it falls within the top 1000, then we will follow the SEBI LODR regulations as well in compliance with the Companies Act 2013. So both the regulations will apply in those cases. Now comes the question why the concept of women director came. So the simple answer is women empowerment, because in earlier times, before this regulation, before this concept, there was no women director in the board and it was not felt necessary to keep the women director. But it was thought that in order to raise the power of women and to make them self-sufficient and self-reliant and to keep them at par with men, then in order to bring the concept of women empowerment, the concept of women director came into force. Now let's talk about section 114 and subsection 2. So all the existing companies are given a time of 1 year to comply with the provisions of Companies Act 2013. So when Companies Act 2013 came into force, there was a thing that section 114 and subsection 1, the regulations of a woman director was there and some other things was also there, which we talked in regarding the class of companies and the minimum and maximum number of directors. So everything was to be complied and it became a very difficult task for the existing companies. So they wanted some time, and so a period of 1 year was given to all the companies that were registered under Companies Act 1956 to comply with the provisions of Companies Act 2013. So it is known as the transitional period or the period of change. So as I already told, section 149 subsection 2 is also known as the period of transition or change because it is the shifting period, means the period where the companies in 1956 companies will shift to Companies Act 2013 in compliance with section 149 subsection 1. Section 149 subsection 2 came into force. Section 149 subsection 3, concept of resident director. A resident director is one who stays in India for at least 182 days during the financial year. Now during financial year is an amendment, earlier it was calendar year. Exception is that in case of newly incorporated company, number of days a person is a resident director in India will be calculated proportionately. So it will be calculated on a proportionate basis. Example, company incorporated on 1st December 21, that is before 1st January 2022. So the financial year will be 1st December 21 to 31st March 22. So number of days will be December 31, January 31, Feb 28 and March 31, total 121 days. So we have to calculate on a proportionate basis. So 182 divided by 365 into 121 is equal to 60 days. So therefore, in the first year of incorporation, even if there are less than 182 days, still considered as resident director, because we saw an example that it came to 60 days. So in case of first year, it is allowed. Exception is IFSC companies. Okay, IFSC companies means International Financial Service Center companies. So IFSC public companies or private companies are exempt, but only till first year of incorporation. So we can see over here that IFSC public companies or private companies, first year of incorporation, if there is no resident director, then it is allowed. We can see in the box that it is allowed. But after first year of incorporation, resident director is not there, then it is not allowed. It means that the rules or the regulations of Companies Act 2013 are not followed. Let's talk about summary. Section 114 subsection 1, minimum number of directors. OPC is 1. In case of private company, 2 directors. In case of public company, 3 directors. CMA is 15 directors. In case of more than 15, we have to pass SR. SR stands for special resolution. Also, government company NPO is no requirement to pass the SR and they can have more than 15 directors. In case NPO wants to enjoy the benefits, then it has to submit the financial statements as well as the annual return. Financial statements as per section 137 and annual return as per section 92. Women director requirement, listed companies, unlisted public companies, PUSC 100 crore, turnover 300 crore. Companies Act states one women director, SEBI LODR states one independent women director. in case of top 1000 listed companies. In case of top 2000 listed companies, it talks about minimum 6 directors. Resident director, then we saw the concept of resident director, 182 days, remember that it is to be required during a financial year. Now, exception was there that in case of newly incorporated company, even less than 182 days, first year of incorporation, then it is allowed. Because in this case, we will calculate the number of days proportionately. Also, exception was given to IFSC companies, the IFSC public and private companies. First year of incorporation, even if no resident director, then it is allowed. But after first year, it is not allowed. So this was all the summary regarding the directors first class, including section 149 subsection 1, 149 subsection 2, and 149 subsection 3. Thank you all for watching the video. Do like, share, and subscribe my channel for more and more updates on the company law series that is being started. Thank you once again. Love you all. Thank you.